Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we're looking at is the Australian US dollar. Aussie USD, you can see it found support Friday on that green line there. I like about the chart is that you have a nice steady pattern of higher lows, indicative of an uptrend. Very definitely your secondary pattern, bullish higher. What I don't like about the chart, on the other hand, is you couldn't eclipse the spring highs. In fact, you couldn't get to the summer highs this last run up. Dropping down to a 4-hour chart, looking at it a little bit more short term, you'd see it did hold support. That you have that 30-day support line there. Really didn't respect it initially, but you couldn't get a daily close below it. Therefore, that support's still good, that 30-day support. However, short term, you can see both your 6 and 12-day patterns are down. So as day traders, we'd be actually looking to sell rallies in this market heading into the new week. Next market, dollar Swiss. Here's a 4-hour chart. You can see you had a couple close below that 12-day pattern on today's opening. As long as you're below that level, that 12-day will shift bearish. Again, as short-term traders, we're looking to sell rallies in this guy. Gave us a pretty good sell signal longer term here also. Gave us a pretty good longer term sell signal too against that long-term resistance up there. You see that 200-day pattern line had a nice reversal there, and then you came down pretty hard since then. So shorter term, here's another guy where we'd be looking to sell rallies like that market on the short side. However, let's not get too excited with the short term. Pan out to a longer term time frame, weekly time frame. The market looks pretty good. Big resistance at the power level at 100, and we've been talking about that for a long time. I think you get a closer to above that level, that'll constitute a breakout long term in the dollar Swiss. Let me go all the way out to a monthly chart, and I'll show you why this is definitely one of my core long-term positions. There it is. We think that a breakout above that power level opens the door to 110, 115 probably. So we think long-term, a lot of room on the upside dollar Swiss dollar itself too. But short term, we'd be selling rallies in this guy right now. Next market, the dollar index itself. Show you what I like about this market on the daily chart. You had a big breakout above the summer highs here. You took out the March high, so love the pattern of higher lows, higher highs. Very bullish market. On the other hand, you may be ready for a little bit of downside here, but another one of my core long positions here, the dollar index. I think you got plenty of upside. There it is. Short term, you're kind of in no man's land. Short term, the 6-day pattern did shift south. That really doesn't mean a whole lot to us, given that the 12-day and the 30-day are still up. So kind of in no man's land here. Potentially, we'll look to buy a longer term dip here. Kind of hard to extrapolate out and say where that would come from, but definitely the 30-day pattern comes to mind. Now, however, by the time you get down there, who knows where that 30-day pattern may. Essentially, if the market makes a new high, that time itself will shift that pattern higher too. So that's definitely something to watch. Next market, the euro. Let me pop out to a daily real quick, and I'll show you that big green line down there. You see primary pattern, we're calling that. Now you can see you had a couple closes below it, a few closes below it on the daily, but that doesn't mean a whole lot because that's a big long-term pattern here. To put it in perspective, look at that on the weekly chart, and you can see, yeah, that's a big level. You only got one close below it, and that's generally an area of the chart where you look for a counter trend rally, and you got it. Back down to a more tradable chart, 4-hour pattern. You can see it just slowed at resistance, at that 12-day resistance, that 12-day pattern line. So definitely a market to watch, given that you do still have the 12-day and the 30-day down. We're still selling the rally. We're still in sell the rally camp as short-term traders, as day traders. Kind of counter to what we're looking at as far as the dollar Swiss, and that in dollar Swiss we'd actually be selling rallies. Kind of the opposite here. You'd think we're selling rallies in dollar Swiss. We'd be buying dips in the euro. We're not buying dips in the euro just yet. We need to see a couple closes above that 12-day pattern. We need to see that 12-day pattern shift bullish for the euro before we'd be buying dips in there. Last currency market we'll take a look at will be the dollar yen. Dollar yen had a big breakout over the last month or so. Here it is on the daily chart. You can see you took out that longer term trend line. You can see that standard deviation line we have, where the market's on the other side of that, and actually you probed above the upper limit of that standard deviation now. So like this guy, buying dips both long term and short term. Drop down to a 4-hour chart, and you can see You have some support down there, around 104, the figure. So we'll take a look at that guy down there. But definitely like buying dips here, both long and short term. You may have to sit back and let the dust settle. Particularly, you got the U.S. election next week. That's one of the reasons I came out of some short dollar chief positions a little bit early, because I'm just leery of that election. You don't want to get caught in a volatile environment in these currencies, particularly in the Swiss franc, which has a history of pretty good volatility, and the currency markets overall. So, it'll be, so I'm definitely looking forward to getting that U.S. election out of the way and getting into a little bit calmer markets. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and I'll see you next time.